All right, good morning, everybody. It is 6:33 on Wall Street, 3 hours before the open of trading. It's time to get your global macro on QuantBox Live, where we uncover the best fundamental opportunities. Now, how do we do that? Well, we have to look at sentiment of what's happening now. Okay, and then we also have to look at what should be. Well, what does that mean? Well, you look at economic data to see what the central bank should or should not be doing and the changes that are coming. You can look at baskets of assets to see how they are behaving together. You can look at 5 year and 20-year historical averages. So you know, like, what does the S&P 500 typically do in January? Well, we even show not just January, but every single week in January over the last 20 years. We look at the flow and stock of capital held and traded by institutional investors. So you actually know what the hedge funds are doing, but you also know what the central banks are doing. Wow. That's amazing, right? Yeah, you know what? It is amazing. The amount of data is staggering that QuantBox does. And of course, it does it in real time, which is just unbelievable. But ultimately, if you sign up, and it does cost some money, because I have to pay money, like, that's just bottom line. It's good. Yeah, it's good. It costs some money, not a lot. But see all these check marks, all the things you're getting? The most important thing is not actually listed here. Yeah, these are features, but the benefit is you're going to start trading with confidence because you're making decisions based on facts, not what your gut thinks or stinks, but based on facts. So you start making intelligent investment decisions based on real data. So, anyways, is confidence worth $8? I don't know. Maybe it is, maybe it isn't. But if you're watching this on YouTube, why don't you join us live? Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So let's log in. What a great open to the year. Unbelievable. Very good. Very, very good. All right, let's see where we are. Will the, tax burden profit taking that happens every year, well, is that going to continue? Well, we'll see. Okay, some money came out of the bond market yesterday, some money came out of the stock market yesterday, some money came out of gold, some money came out of oil, some money came out of Bitcoin. Hey, 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 hey. It's interesting, right? Remember, many of these markets are up 25 and 50% last year. If you took profit in December, you pay taxes in April. It's actually before that because of your business, but let's just say in April, because April 1st is what most people are familiar with taxes. So just imagine, based on what you did last year, you're going to pay taxes in April. Oh, but if you take profit this week instead of last week, you pay taxes not this April, but April 2025 for what you basically did last year. Oh, wait. So there's some profit taking this week? Well, of course there's some profit taking this week. Yeah. Yeah. So, anyways, we know that. We've always known it. It always has been and always will be, because there's reason and rationale to all of this. So, anyways, now the question is, will we swing back around? Well, there is a little bit of evidence of swinging back around. Let me zoom in a little bit for you. Oh, there you go, you say. Yeah, a little bit. I wouldn't get too excited. It's a +2. It's just barely, ever so barely, little bit risk on. That may or may not change. You can look at the scatter plot, instantly see its risk off here. and then you ever so slightly risk on. So which is it? Well, it's both, of course, because they're two different measures. So I'd look at that and I'd say, well, be careful, especially if you remove Bitcoin, it looks just sort of flat. But things that should be, more down or up, and things that should be up or more down. So that looks generally risk off. But we'll take a better look. If we scroll to the bottom, okay, this is where the shape of all the different stock markets over the last 12 months. And it seems like almost every stock market around the world is either down or flat. There's a little bit of up going on the DAX. Okay, little bit. So nothing remarkable going on yet, nor there should be. Okay, taking a look at the risk gauges. Ever so slightly trying to turn bullish on the monthly, but that shouldn't be showing this. Which one's wrong? Let's see. So we got a +1. So that's right. So this should not be showing this. So I have to look at see what's going on here. Quarterly bullish. Still misspelled. Reminds me of Billie Eilish for some reason. Bullish with one L. All right. On the weekly basis, some risk off, some daily, some risk on. So it's still quite a bit of mixed bag, right? And this is neutral, so this should show nothing. I've never seen that before, so it's interesting. One of the developers has done something here, but they didn't fix the spelling mistake, and then of course that. So, anyways, be careful. That one's mixed, and this should just show basically nothing. So a little bit of risk off, a little risk on, neutral. Yeah, be careful. Be careful. Gold has come down a little bit. S&P 500 come down a little bit. Yen slightly strong. Okay, yields up. Okay, not good. Dollar strong, not good. Volatility rising, not good. Yeah, but again, totally predictable, right? Drew says for this graph, this one. Which one were you talking about? I think you said it around here, right?
Yes.
Yeah. So that's just candlestick data that we're pulling from, well, from the data provider. So there's nothing unique to this. Now you're saying like maybe the shape of this doesn't match what you're looking at when you look at like the DAX and the S&P 500 because it's accumulation over time. It's not the price, it's the accumulation over time. So you're just getting sort of the rough shape over the last 12 months, how things have built up. Okay, but that's just candlestick data. All right. Again, the way that this works is we have the QuantBox score here. That's long-term economic data. Is this asset class bullish or bearish? Okay, going left and right. Okay, and then you look at what has actually happened or what is actually happening now. Now, like very, very short term, literally now over the last hours, not days or weeks, hours, right? So it's a measure of what's happening right now today relative to the longer term economic score. That's what's important because what we're trying to figure out using this is this simply a dip? So anything here with a positive score, QuantBox is saying, well, its future outlook looks pretty good. So if it's down today, it might be up tomorrow or next week. If it's just a dip, then these are opportunities. Well, you might want to look at seasonality and find out, well, is it a time when maybe everything does reverse? Well, then you'd go and look at this as with a different point of view. And that's your job as a trader and investor, because this is just telling you the facts, long term versus short term. It might be an opportunity, but if you are going through the seasonality, which I implored you, I begged you yesterday, what, 7 times? I said, spend hours over here now. Won't make sense to do it 4 weeks from now. You would have missed everything. So you should be doing it now and then say, well, that's interesting. Maybe this is maybe when things are out of position, it's a dip, but in certain times of year, the dip becomes a reversal. Well, pay attention. So anyways, look at this. Okay, these are expected to be bullish, and they aren't now. So maybe they will be in the future. Okay, everything up here is bullish right now. Pound, yen, Aussie, yen, dollar, yen, CAD, yen, euro, yen, Swiss yen. Okay, lots of yens, right? So maybe you want to look at it the other way, where it's maybe been down, maybe today is up, and maybe tomorrow or next week is this way. That's your job. And it's helping you spot these situations where things are out of position. You want to find them quickly. So you should be able to look at this chart and see it within seconds. And for those that have been trying to do this in the past, it took 20 minutes to figure out what you can now figure out in 10 seconds, 5 seconds, which is cool, right? What do you want? 20 minutes worth of work or 2 seconds worth of work? When I like doing a shh. No, the answer is the 2 seconds. Much better. So, great. So you might want to look at like the yen pairs and say, well, maybe they're out of position today, right? So, like, for example, then you zip over to your yen pairs. Okay. We don't know, by the way, if it's an opportunity or not. I don't want this one. Actually, I want it the other one. Okay. So it's not something that you just instantly start looking to sell, but you set up today like, I wonder if it's going to be a sell today. I wonder if it's a reversal or a retracement. And if it's a retracement, you probably want to sell it. So it's a way to frame how you look at your trading setup. So if you were looking at yens, let's say, is generally they're up today, but they're getting a negative score out of QuantBox, then technical analysis would be used to look for something like this, either today or later in the week. So you don't know if it's going to happen, but QuantBox just says, well, that's how you might want to look at the chart. Because a lot of newer traders, what they see is that might happen, but that might happen, and I don't know what to do. Well, of course, in that case, anything could happen, right? Yes, anything could happen, but what are the probabilities? Like if you're worried about an asteroid hitting Earth tomorrow, it's going to be hard to get out of bed and make a decision, right? Why get out of bed if we're going to die tomorrow? Might as well just read French existential poetry. Okay. But in this case, you're trying to look at probabilities like, okay. There's the higher probability in the moment now. Fundamental analysis of both long-term and short-term data, what should be happening, what could be happening, what is happening. And you'd say, okay, well, that might happen, but technically that doesn't make sense yet either. And fundamentally, it kind of looks this way. So yeah, euro yen or all the yens are up today, sweet. That might be your opportunity to sell. And that's, again, newer traders don't think that way, where it's been up for 16 hours. Sweet, let's sell it, right? What do newer traders do? Well, they're convinced it's been up for 16 hours, it's going to go up another 16 hours. Okay? Okay. Boris says, isn't Japan on holidays? Not sure, but people are still trading yens. Okay. Okay. So anyway, so that's how you want to look at this. Frame your setups. And yes, it might be climbing. It has not made a higher high yet. The moving averages are pointing lower. The target is probably down to the green zone. And so you might want to look at the next 24 to 48 hours of price will probably stay lower than this zone. Now, if it goes higher, that might change things, but it hasn't gone higher, so maybe don't worry about it. Recognize that it might happen, but wait for the proper setup. So you might say, well, somewhere between 156 and 157, okay, it's actually 156.50. So in this 50 pip zone, you might look to sell. Now drop into a smaller time frame. So this zone to this zone, right? Somewhere like that. So you can label this, okay. I'm just picking out random. I don't care about euro yen. I'm just doing this randomly. I'm trying to show you the thought process, right? Plan A, sell. Plan B, sell. Okay. Now, I don't know if that's right. And it's logical, but it may not be correct. So now my job is to be a tactician. And do I sell a dip like this? No. Now you have to remind yourself of proper technical analysis. What if it did something like that today? Where would the best places to be to sell? Here and here. Double top or lower high? Okay. And if that doesn't work, then maybe you'll get a double top or lower high up near plan B. So now you just sit and wait. If plan A never sets up and delivers the goods, then what did you do over the last, let's say, 2.5 hours? Not lose money. That's the best way to not be successful. Okay. So then you watch it rise up to plan B. And then once again, you're ready, willing, and able. I call that RWA. It's knowing when to be ready, willing, and able, right? For the setup. So if this doesn't come to fruition, now you're waiting for the same kind of thing up top, where it comes up here. And your opportunity is either sell the double top or sell the lower high. And if that happens, then you take one. And the probabilities now are pretty good based on what you saw in the 4 hour. Okay. And if plan B doesn't come to fruition, then you've wasted, well, I shouldn't say wasted. You've spent, let's say, 12 hours in cash. Cash is a position. Cash is a decision. You decided not to trade. Instead, you decided to keep your money in cash, and that is a position. Okay. Now, Drew said, would there be an objective difference in euro yen versus any? Absolutely. But once again, I want you to do that work in QuantBox. All the data's there, right? You don't want me to point those out, honestly. But it is there. Should you have an opinion, Kiwi versus euro? Is there a difference? Is there a difference between euro versus Swiss franc? Yes, yes, yes. You can get that long term fundamentally out of QuantBox. You can use technical analysis to do it. So I have short term indices. So you could say, if you are buying yen, so you're thinking this, okay, that's close, but you're thinking this over the next, bit. Then which one is the weakest one that you want to sell? Is it Aussie? Is it euro? And they look pretty weak, huh? Pound? Well, it looks like it's going up. Kiwi? Maybe. It's definitely, well, it's not down, it's not up. Okay. You probably don't want to sell this one either because you probably have used QuantBox to analyze the Swiss National Bank's future policy. We can see it graphically in the central banking tab of QuantBox. I've also read their speeches. Right now, QuantBox doesn't do that. Maybe it could. I don't know. Let's keep dreaming. Maybe it could, right? Get a little chat GPT going. Build it in. Wayne, have it read all the reports. Well, I actually read all the reports, and I know what they're thinking. And if I understand what the Swiss National Bank is thinking, right, President Jordan and his team, then it helps me predict the future. And then once again, right? Once again, it helps me decide, okay, I don't want to short this. That, ultimately, that is our job. Yeah, I'm going NLP on you. Well, if you don't want to be successful, Drew, if you don't want to fight for your future, then yeah. Yeah. All right. Sorry, no, I do stuff like that. I do it all the time, but I'm an NLP guy, so I can't turn it off. The genie's long out of the bottle. So anyway, so that's one way I do it. But then look, I also have it set up where it looks like the exact same thing. All I'm doing is instead of using hourly candles, I'm using daily candles, and I'm able to look at the pound versus everything, the Australian dollar versus everything, euro versus everything, CAD versus everything. So you've created all these indices on a higher time frame. In a way, QuantBox is, completely differently, but it's doing something similar where all the indices I just showed you are shorter term. What's happened over the last 24 to 36 hours, where when I look at these indices, it's what's happening over the last 24 to 36 days, maybe 48 days. Longer term, right? And shorter term. And ideally, you're trying to line these things up. Now, the way QuantBox does it is looks at long-term macroeconomic data and then kind of scores them in a way where it says, oh, well, these things are good and these things are bad relative to how the monetary policy of the central bank is likely to act. And it's making these, it thinks, quote unquote, thinks in macroeconomic terms and in actually comparative analysis. So it has to say, all this data is good for the dollar, bad for the dollar. All this data is good for the euro and bad for the euro. And then it says, well, what if you compared euro versus dollar? Okay, that's half of what QuantBox does. And then the other half is, well, what's actually happening now in the market over the last few hours? Okay. Oh, well, we're always trying to line that up. And now I'm using a different form of technical analysis to also line these things up. So eventually, yeah, does a does a particular yen can you just trade all yens? Most of the time. But even if you've made a decision on the yen, should you further refine the one that you drill down on for today, whether you should be a buyer or seller? And the answer is, oh yeah, absolutely. Right, absolutely. So I looked at euro yen, and I see euro down significantly, and a possibility of yen up. Cool. So would I do Swissy yen? No. Would I do pound yen? Not today. Maybe in a week or two, but not with it like that. Okay. Also, you might like, well, what about selling CAD yen today? Well, we also have QuantBox to tell us that there was a 9% increase in cash flow towards the Canadian dollar. Whoa, what? Yeah, so it might be okay, and you might, right? But we still know this data to be true. And that also might shape whether you want to be, there it is, 9.5%. Hedge fund, the flow of capital by hedge funds has been toward owning the Canadian dollar week over week. On the longer term, they may be selling, but last week they definitely bought. And how do I know definitely bought? Because up doesn't always mean buying. Like, for example, all the assets yesterday fell, right? Anything like, let's say every stock market fell yesterday. Did anybody actually sell the stock market, or did people take profit? Because it bugged me. I heard it today on Bloomberg, right? It's 4 o'clock in the morning. I'm listening to Bloomberg, and they're like, oh, another, what did he say? Another day of losses. I'm like, losses? Nobody lost money. What are you talking about? Nobody lost money. Yeah, the stock market's down, but people are taking profit on trades they made a year ago. They just made 30% profit. Who the hell lost money yesterday? The stock market was down, but that doesn't mean people are losing money. So I get quirky, right? I must have a deficiency, a vitamin deficiency of some type, because I hang on to words like that. Like I'm on some sort of spectrum. Because I'm like, oh, now I'm in the shower screaming and yelling, nobody lost money. They're all stupid, right? Yeah, no, everybody made money yesterday, but they sold the stock market. Right? They sold out of a position. So anyway, so how do I know money? How do I know they actually bought the Canadian dollar? Well, there are less bears. So bears left. They sold their bearish positions. So just in that sense, they bought, didn't they? If you're short and you exit your short and you say out, your broker offsets your short position with a long position. Now it's neutral, right? To remove your short, you have to go long. So that's bullish. Less bears is bullish. But then on top of that, there are 13,000 new bulls. They actually bought a contract long. Now, maybe it's bears turning bullish. Well, I don't know that. But less bears is bullish, but more bulls is more bullish, right? And then the difference between significantly less bears and very significantly more bulls, you get this big net change. So there are less bears and more bulls. Money absolutely flowed toward the Canadian dollar, but it's still heavily short. That's the stock. Add up all the contracts long and all the contracts short. It's still 65% short. But the flow of capital last week was long. That's changing and maybe changing very, very quickly. And so, anyways, could this possibly shape whether you sell CAD yen this week? Oh, it certainly could. And you have to understand 99% of people in the market don't even know this. So to have it there and for you to analyze it and say, oh my God, less bears and more bulls. Whoa. Okay. Very significant. Okay. And of course, if you look at the change in long contracts and there's change of short contracts, it's very significant. I mean, it was redonkulously bearish. And some of the bears well, a lot of the bears are gone, and we got new bulls. So maybe you say, if you knew this, you're like, well, when I go on my yens, I don't really want to sell CAD this week. Maybe next week. Okay. So here's what I would do if I was me. Knowing what I know, I could come to the conclusion where I have two opportunities to trade this pair. Maybe you do this for multiple pairs, but you could isolate. You're like, hey man, I don't mind getting short euro yen. It might take a day or two. This is where, again, new traders, they just get lost. They feel like every day they have to trade, otherwise they're not a trader. No, you don't get paid to trade. You have to really understand that. Okay. The brokers get paid if you trade. You don't get paid if you trade. You only get paid if you profit. So you need to think about, like, what are my profit opportunities for the day? And you could say, well, I have plan A and plan B. And if that doesn't work, you don't trade. And it might take all day today. It might take all day tomorrow. Okay. And your worst case scenario is you spend 2 days not trading and you don't get a trade plan and you've spent 2 days not losing money. That's pretty good. If if one of these trade plans does come to fruition and you do get a lower high, it's quite high probability. You'll at least be able to get a stop to break even. Cool. Another thing you could do, of course, before you do your deep dive, you check your yen pairs. Chickadee check. Okay. And you see, technically, this is what we're doing. Seasonally, that typically doesn't happen. Okay. Maybe in January. Okay. But typically only a little bit in January. Okay. And this is awesome for me because I've been teaching this a long time. So it's good to see that it's all now. QuantBox has the data, can look at it. Okay. And like, so there's some down, but in the near future, in the next few weeks, the down bias might change if you were trying to set up the down. And again, you're only doing that because it looks like that's what's setting up in the market sentiment sections of QuantBox. Okay. The next consideration is, well, will what normally happens, will that happen this year? And now that's where you have to analyze the monetary policy of the central bank because they control the value of the currency. And so when we look at QuantBox, let's say between now and May, well, euro yen typically goes up. We can see that. There's no debate. Will it go up this year? Probably. But what would make what normally goes up not go up? Well, a change of the policy of the central bank. And that's why we have this. And you're like, Wayne, there's so much data. Yeah. Yeah. This is why if you get it right, you get paid a lot of money. And that's probably why you're here. So it's complicated. Okay. Oh, yeah. And Boris says, hey, aren't they talking about? Yeah. But what they're talking about, we see visually. So what everyone else is talking about, we have data. So you go to Japan. Oh, yeah. Yeah. So we're at negative interest rates. And in a year, interest rates are scheduled to be positive 0.5. So if they start a liftoff here, if they raise interest rates in the next couple of months from negative to positive, really to zero, right? Because remember, that's sort of an average of their own analysis. Remember, we're getting this from the Bank of Japan. This is not an algorithm trying to predict the future. This is the Bank of Japan trying to predict the future. We just happen to have it graphically. Okay? Sweet. So it's the potentially the most bullish currency pair or currency on the planet if it does that. So then we go back to euro yen and say, all right, we got to now have long term, short term, but or I guess short term, long term, and then maybe like very long term, or I don't know how to describe. Like the central bank's prediction actually isn't that far out, so it's more like we have to say what's normal and then what's abnormal. What's normal is euro yen goes up. It's not going up now. We see this. Okay. So there's something odd already. So what's odd? Why is it not going up right now when it typically goes up now? Well, do you think it has to do with the potential of that chart I just showed you, that graph I just showed you of the Bank of Japan's projections for interest rates? Yeah, that's probably what's going on. It's typical. This daily chart is usually pointing up. It's pointing down. We see here it usually goes up. Well, it's definitely not going up. So, do you think it's the central bank's own predictions of the future? Yeah, probably. So you kind of still have to be ready for both, but you have to understand where all this data is coming from and then how to kind of put it in its own box, right? Baby, don't put baby in a corner. You got to put each one of these in a corner. Okay. So you're like, okay, I know the long term norm. That's going to be somewhat of an influence, but we also know the the potential or even likely change of policy, and that's what's pushing against what's normal. Which one's right? They're both right. That's the thing that you have to start getting used to. What usually happens is right. It's factual. I got 20 years of data. I can show you every price that leads to these averages. But then there's the influence of the market trying to predict the future, right? There's the economy, the economic reality of now, but then the market is trying to predict the future. So there's the market and then there's the economy. And so the market is saying, well, we think the Bank of Japan might be changing their policy soon. And suddenly, because of that thought process, you see yen strength. Okay. Drew says, is there any catalyst that could prevent them raising rates? All kinds of things. They're not achieving their objectives. Now, I read some Bank of Japan reports yesterday, and they seem like they're on their way, and they seem like they're getting ready to change. You can see it in the language they're using. It's beautifully written, and especially compared to the British. The reports of the UK right now are poorly written. It's really really funny actually and surprising. Um, but the Bank of Japan reports are quite clear. Like, yeah, they're achieving their objectives. Cool. So if that stops, maybe that could do it. But when they revise at their central bank meetings their future outlook, so let's say things do change. There's some sort of catalyst, right, Drew? There's some sort of catalyst, and it's an important one. Well, when the Bank of Japan has their next meeting, they may adjust this and we would see it, and maybe it flattens out. See, everyone else, when you see the experts on TV, one after another, they talk about what they think and how they feel. And those are two things I don't care about. They what they think about the Bank of Japan, how they what they feel what the BOJ should do. Their best guess on future interest rates in Japan. And what I preach is just get the facts. There is no opinion. There is no feeling. There is no guess. This is this, and it's up to the Bank of Japan to change this opinion. Okay. So this data is from the Bank of Japan, gathered by the OECD, the Organization of Economic and Commercial Development. I always mess that one up. We gather it from them, and then we pull it in from the data from the OECD. And the OECD is a big global institution, right? OECD.org. Okay. And it's just a group of rich countries. That's it. That's it. Okay. Yeah, you're right, Denise. Is it today? Yeah, we could. I don't think we officially switched it, but why don't we do one today and Monday? Because we want to switch it to Monday because we wanted the Fed data, right? Sweet. Or I should say the NFP data, to figure out the Fed model that this only the CIA has. Shh, shh. The CIA, everybody, the Council of Investment Advisors has a secret economic model that predicts recessions. I haven't shared it with anybody else. And so what Denise is like, hey, did we move it to Monday? We have a meeting. The CIA has a monthly meeting now. But then we decided to do it Monday after NFP because it fits into our super secret economic model, predicting recessions 6 months before anyone else is even talking about it. Well, the thing is, we voted at the last meeting to do it today, right? And then after, like, hey, shouldn't we do it Monday? Let's do both. We'll do both. They're not long meetings, right? So what we'll do, Denise, is I'll just show you how much money the portfolio's made or lost, and that can't take that long. Um, And then from there, what I want to do is refine and define what we actually want to do in that meeting, right? Like what data and stuff. So yeah, what time today? Did we didn't pick a time, did we? I'll have to email the CIA. You guys around noon? What day is it today? Is it a Wednesday or is it a Thursday? It's a Wednesday. Yeah. Yeah. So anyways, I'll send out an email, but noon, I guess. I think most people are around then. All right. Well, anyways, quant boxers, we make decision based on economic data. Okay. But we have market gauges that tell you what's happening now, regardless of any long-term currents. Think about it like there's a current in the Pacific Ocean. You guys know Thor Heyerdahl? He built a raft out of rope and trees that he chopped down in Ecuador, and he crossed the Pacific Ocean. 5,000 miles. That's going from New York to LA and then back to Colorado on a raft made of rope and trees. Oh my God, in the Pacific Ocean. Okay, now I want you to think you're on that raft. Well, for about 3 weeks, he just floated out at sea going nowhere. And then one day, they hit the current. There's a current under the water, then suddenly, boom, they're heading west. Okay, to Polynesia. Cool. But there's those currents. Now imagine once you got the current, there it's guiding you west. That's how I look at like the economic data. Bullish or bearish, where the central bank's either slowing the economy down or speeding the economy up. Those are our trade winds. Okay. That's our current. But then there are rainy days and sunny days. There are cloudy days, right? Sometimes the wind is pushing you in the direction you're trying to go, and sometimes the wind is pushing against you. Those are like the market forces against the economic forces. And so right now, this is the direction of the wind, this way. And that could be working for you or against you, depending on your bias. And that's how we're using market sentiment. This is the sentiment. Okay, these things are up and not expected to be. These things are down, but not expected to be. Okay, so that's the reality. The long-term forces on the bottom, short-term forces on the side. So it's our job to look at all this data and think ahead. So now I'll make another suggestion. Go back through this, do your seasonality work. I said it 7 times yesterday. Do some seasonality work. Think about the shape of the year. And you'll see a little bit, well, you'll see a lot of the influence of what typically happens this month, next month. Okay. And then spend some time on the central banking tool and see what they're telling us right now. Remember, it's just facts. QuantBox just shows you what the central banks are telling us. And then all the idiots, or should I say experts on TV, are debating what the central bank said. And we don't have that confusion or delusion. We only have facts. So you have that. So look at that and try to see and observe over time too how that information can shape the direction of the market. So again, we looked at euro yen and it says almost always euro yen goes up for the next 12 weeks. Great. But it's not going up this year. Why? And what will you do if it does start to go back up like normal? Okay. Oh, because QuantBox doesn't predict the future. There's no guesswork. There's no guesswork anywhere in QuantBox. Okay, so you have the facts, but there's still, a journey for you to. You still have to pilot your homemaker craft across the Pacific. Anyways, so sometimes it's working with you, sometimes it's working against you. That silly thing we call a market. All right, so I went too long today. I apologize. But thank you for being here. I will see you again soon. QuantBox again. We will meet tomorrow for the same. So have a great trading day. Peace on earth. May the pips be with you. May your profits be above average. Cheers.